Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
It's the perfect end to the perfect week. Today's economic calendar might seem quiet, but there's one event that traders shouldn't miss: the release of the Consumer Sentiment Report from the USA later this afternoon. It's your last chance for a fundamental trade before the weekend begins. And hey, make sure you stick around till the very end, because we'll be sharing our exclusive technical analysis for foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
Starting with currency news, the euro made waves as it hit a 15-year peak against the yen and a 5-week high against the dollar. This surge was driven by the European Central Bank's decision to raise interest rates for the 8th consecutive time. They even hinted at further tightening to achieve their medium-term inflation target of 2%. The ECB's bold move, increasing rates by 25 basis points to 3.5%, the highest in 22 years, has caught the attention of traders worldwide. Now let's shift our focus to digital currency. Bitcoin's trading volume took a dip to around $25,000 after the US Fed's meeting. The price of Bitcoin and other digital assets experienced a tumble following the Fed's announcement of possible future interest rate hikes. However, Bitcoin is currently trading at $25,408, showcasing a rally of 1.12% from the previous close. It's important to note that Bitcoin's journey has been quite eventful, with its recent retreat from a 10-month peak above $30,000 in April. Interestingly, market analysts had initially predicted that the Fed would implement a policy of rate pauses. Moving on to what's making headlines on Wall Street, the Dow Jones Industrial Average surged over 300 points, while the S&P 500 reached a fresh 13-month peak. The Nasdaq didn't stay behind either, experiencing a notable 1.2% surge. Microsoft shares gained momentum, popping 2.5% during midday trading. And that's not all. Domino's Pizza soared more than 6% after Stifel upgraded its stock to buy from hold. Meanwhile, Target stock prices saw a significant surge of around 3% following Bernstein's outperform rating, taking into account the recent weakness in Target shares. Let's not forget about commodities. Oil prices bounced back, recovering from the previous day's plunge triggered by concerns about future US interest rate hikes. All eyes are now on China, the world's top oil importer, as they prepare to announce key economic data for May, including retail sales and industrial production. Investors are eagerly seeking signs of improvement in China's economic recovery or any potential stimulus from Beijing. And finally, the shining star of the show, gold. After hitting a 3-month low, the yellow metal made a comeback. Thanks to the Federal Reserve's decision to pause interest rate hikes, gold experienced a boost as the US dollar declined and bond yields pulled back in response to disappointing economic data. Recent economic indicators, such as a 0.2% drop in May's industrial output, missing expectations for a 0.1% increase, and unchanged initial jobless claims at 262,000, played a role in driving the gains for gold. However, it's important to keep in mind that the longer-term impact on gold prices will be influenced by Wednesday's Federal Reserve decision and upcoming decisions. With at least 2 rate hikes expected in 2023, the ongoing rate hike trajectory is likely to support the US dollar, potentially having a bearish impact on gold markets. Now let's dive into our highly anticipated technical analysis for the day. First up, let's take a closer look at NZD-USD. This currency pair is currently trading within a primary resistance level. If the bullish momentum continues and it breaks the resistance with a close above 0.626, we could witness a rally all the way up to 0.635. On the flip side, if the level is respected and we see a close below 0.6205, a correction back down to 0.613 might be triggered. Shifting our focus to the S&P 500 analysis, the US 500 is currently trading just below a primary resistance level. Should this level be respected and we witness a close below 4,410, there's a potential for a correction back down to 4,380. Now let's analyze crude oil for today. WTI rallied beautifully as predicted and is currently consolidating just above the $70.5 level. If it breaks below $70 a barrel, we could see a decline back down to $69. On the other hand, a close above $71 a barrel might ignite a continuation of this rally, potentially reaching $73 a barrel. Lastly, we can't forget about gold. The yellow metal proved that it's not ready to be forgotten just yet. It's currently consolidated just above the 1955 level. If it breaks below 1953, a correction back down to 1940 might be triggered. Conversely, if it breaks above 1965, get ready for a bullish charge up to 1973.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.